Today, we're talking about something that has the entire housing market acting like it drank 6 energy drinks and read half of a financial article online. The Fed Reserve has gotten a new chair. And now everybody suddenly thinks mortgage rates are either crashing tomorrow, shooting to 10%, or the housing market is about to explode again. The problem, most people don't actually understand what the Fed does, how rates work, and how this affects buyers and sellers in this real world. So today, we're breaking down what the Fed chair actually controls, what mortgage rates move before the Fed does sometimes, and what this could mean for buyers in 2026. Why sellers need to stop living in 2021, that pricing fantasy land, and why the media is making everybody lose their damn minds. So grab your coffee or something stronger and let's unrake it.
Let's do it.
All right.
Okay, Dane, let's do it.
Well, everybody, welcome to Real Estate UnRaked, number 41.
Good morning.
And today we have a special guest, Mr. Corey Hudson from Ray Mortgage.
Corey Houston.
Hey, buddy.
Corey.
How's it going, guys?
All right. Welcome.
Corey in the house.
Well,
that was a show. Sorry. Corey in the house. I don't know if you know that. That was a Disney Channel show. And
Okay, I was just going to say, is that one of those Hannah Montana things?
Yeah, it was a spinoff. That's so Raven. And it was Corey in the house.
Yes. I think my
So Corey's-
my younger siblings watched that show.
It was such a great show. Okay.
And Corey's in the house.
Corey's literally in the house.
Well,
Well, this is Corey's house.
I'm old as dirt, so I don't know any of that stuff.
We'll show you.
Oh, no. Not until you watch Jurassic Park.
We're going to show. No, I'm not watching that. I get it confused with Jumanji every time.
Oh, my. How can you do that?
I'm not sure.
All right. Well, we're in rare form today, so dad joke time. Girls, I'd like for you to go first because we are missing Dane today.
Boo. All right. Jaycee.
Okay. How do you stop a bull from charging? Cancel its credit card.
Oh, good one.
Okay.
Bulls spending all money.
Okay.
All right. I like that one.
Bridget?
What do you call a plane full of balding men? Receding airlines.
Oh, man. That's
Sorry, I had
It's
to.
close to
I'm sorry. As I said, I warned you guys. I'm sorry. Sorry to the guys.
so in tribute to Dane with usually he has wife jokes. Since he's not here, I'm going to do one for him. So my wife and I always compromise. I admit that I'm wrong and she agrees I'm right.
There we go.
That you're wrong.
That's what marriage is about, baby.
That's what it is.
That's a good marriage.
All right. Well, before we tackle what the Fed actually does, let's talk to big old Corey here for a little bit, see how he's doing, a little bit about who he is, what he does, and what he can do for the customers. So,
All right.
hello, Mr. Corey, what do you got going on, buddy?
Appreciate you guys having me today.
Yeah.
Guys and ladies. Excuse me. Didn't want to,
Yeah, we're the bros.
all the pros. Corey Houston, Rate Mortgage, Team Profit, been in the mortgage business for a little while now, since like 2012. Worked for the big banks, did the broker world, and then now a little bit of a merger to both worlds as a correspondent lender with Rate. So Clay County is where I reside. I've been there for a long time.
Yeah.
So as far as, what we're doing and as a team is just really looking to help our customer bases as much as possible and provide them the options that will be successful in the home lending space and making that American dream come true.
I agree. That's
Love it.
awesome. So let me ask you something. What are buyers overreacting to interest rates right now? How are they? Are they, for one?
Sure. I mean, a rate is something that is always changing. It's a moving target. Right now, I think we're in that environment to where people are getting off the fence and they're excited to buy. It's that season, right? School just let out. So the avid renter is back in the market wanting to buy that first home, or the growing family, right? The growing family that's looking to scale and get the bigger home. So I think it's a matter of having the conversation of what are the rates doing. I think over the past week, we've seen some improvement, which is nice.
Finally.
Yeah.
So, but it's the gas pump example, right? I mean, people go to the gas pump,
Right.
they see, what that price per gallon is and the media and everything else. And then you have to have that conversation that takes them in a different direction and focuses on, what is the goal? What is your budget? what are you really trying to accomplish here? So we can talk about the rate all day, but we try to talk about more things and get them rolling.
Yeah.
Yeah, because I was gonna say, like, to your point about the gas prices and everything too, like, people are kind of freaking out, and I know I hear a lot of buyers saying like, "Hey, I'm just gonna wait till the rates drop." Like, what is more dangerous for a buyer right now? Is it them buying too early or waiting too long?
So I think it's just a matter of, again, what is their goal? I mean, we are in a buyer's market right now. So there's,
Mhm.
I mean, I think you guys can say that sellers are attributing more as far
Right.
as making those repairs or offering to cover some closing costs and, whatever incentives that might lie. So it really becomes a need. And if there's a need to buy, I think now's a great time to buy.
Yeah.
I would not be waiting on rates to go down. We had the same conversation with, clients that were there
Yeah.
last year, right? Last summer, they waited, and here we are. We're in a very similar environment. So, and then also, I mean, I think in our Florida market, what we appreciation and home value is 4% around year after year.
Yeah, it varies between 3 and 6% a year.
So, I mean, that's another thing. So, prices are still going up. The market's hot in Florida, and
Yes,
and if you're looking to secure something of value, home's the way to do it.
right.
Oh, awesome. Well, one more question for you, and we'll jump in the material.
Sure.
What is probably the most dangerous thing right now? Buyers waiting, or waiting too long, or buying too early?
I think waiting too long, honestly. If you if
Ding,
you're
ding, ding.
if you're waiting, you're not gaining any equity. You're not achieving what you want to achieve. It's a matter of having a conversation. It's a matter of positioning
Yeah.
yourself correctly and having, good realtors by your side and, really making it happen.
Well, thank you, sir, for coming and being part of this today.
You
And
bet.
this is going to be interesting. I've been trying to get good topics to talk about, relevant topics. And
Yeah.
we've had a lot of movement with a lot of this stuff in the last couple of weeks.
Yeah, and it's relevant now. I mean, I'm going to learn something.
Yeah. Well, here we
We're all
go.
learning. So,
So let's start with the biggest misconception in America right now. The Fed does not directly control mortgage rates. And honestly, that shocks most people. Federal fund rates equal like overnight lending between banks. The mortgage rates are tied more closely to 10-year treasury yields, mortgage-backed securities, inflation expectations, the investor confidence, and the global economic stability. So when people say the Fed cut rates, why didn't mortgage rates drop? Well, it's because they're not exactly the same thing. Mortgage rates are basically the market trying to predict the future before the Fed officially reacts.
and this is where buyers get frustrated. They hear one thing on the news, then they call a lender and hear something completely different. Like I've literally had buyers say, and I feel like a lot of people have too, like, but the Fed lowered the rate yesterday. Why is my rate still high? And it's because the market already priced expectations beforehand. And social media is making this way worse. Like we talked about this, like hands down, right? Like I can't imagine how many people are on there. Like I mean, I get it, it's like a marketing thing, but another part of me is like, I don't know. I just see a lot of stuff.
Yeah,
Do you see
Crypto
stuff
Kyle.
on that? Yeah, Crypto Kyle. Like, do you see a lot of that stuff, Corey? Like,
Oh, yeah.
oh my
I
gosh.
feel like I have that conversation daily.
Yeah, like please listen to me.
Oh, I
Maybe
see
not
it.
TikTok.
I see it with the rates all the time. Could you imagine us realtors dealing with all that?
No.
Corey, what does your TikTok for you page look like?
Yeah.
Does it get kind of scary?
I said that the expectation that we will have a target rate conversation up front, but that it is a moving target. So we have
Right.
that live conversation once we go under contract. But we can have a conversation about rates today, and it'll be completely different this afternoon, let alone next week.
Yeah. It's always you're right. That's a good way to say it, like a moving target. I like that.
It
I'm going to
is.
use that with people and my buyers and stuff. But anyway, too, I think buyers are also emotionally exhausted right now and they don't really know who to trust because of it. Because you'll hear something on the news like house crash incoming, and then another one says like buy now because it's going to explode again. And for first time buyers, especially, they feel probably paralyzed because of that. And they're scared to make the wrong decision because everybody online sounds so confident. But
Mhm.
real estate's not black and white. Like we said before, it's all strategy.
Strategy.
Strategy is the word.
I think one of the biggest issues is buyers waiting for some magical perfect moment. They think once rates drop, then I'll buy, but they don't realize everybody else is waiting too. And what happens when demand surges? Prices go up, competition goes up, negotiating power disappears. So sometimes buyers accidentally weight themselves into a worse situation.
So I guess this is another thing that people really just don't understand or don't get. The Fed doesn't want the economy to crash at all, but they also don't want inflation to explode again. I mean, granted, we all like that whole idea, like rates need to be back in the twos and gas just needs to be $1.99 and milk needs to be $3.96 a gallon instead of the $5 a gallon, eggs 99 cents. All the great things that I had when I was growing up. But they really need to focus on the fact that they try to keep a consistent balance between employment, inflation, consumer spending, economic growth, and market confidence. Right now, the housing's caught right in the middle of all this stuff. And the affordability factor, that's always something that we talk about on the show. I know you see it all the time. I mean, people's DTI has probably changed so much versus what it used to be.
Yeah, we try to find a happy medium because we get on the edge of max DTI often. I use the $9 a jar of mayonnaise as you just went through the grocery store example. But if there's a need and there's a will and there's a budget, that's where we have the conversation.
So we all know that the inventory right now for housing is kind of like low.
Yeah.
Even though it's still there. But Corey, if rates get down into like the mid fives, what do you think the inventory is going to be like for us?
I think the mid fives would be fantastic. I think that's a happy medium. I think that is something that would be, the quote unquote, the new norm that people will be comfortable with. I think housing would definitely, on the inventory side, would pick up because the people that we talked about earlier have been waiting to do something, whether that's buying the first home or selling their current home to move into a different neighborhood or to expand or whatever the case may be. I think the activity will certainly increase and inventory will increase as well.
Yeah, I agree. And I mean, we talk a lot about this as well as the acquisition cost, and, most of the other people in our industry hide this with, we can help you get a better deal in a house. We can give you closing costs. We can do all this stuff. But it truly is, you really want to talk about the bare bones of it to have a good, true understanding for your buyers is acquisition cost.
Right.
There's a cost to buying anything. And we do right now. We feel it at the grocery stores. We feel it at the gas station. We find it everywhere.
Right.
And what we do, especially in a market right now that is a really great opportunity for buyers, is if you can lower that acquisition cost. And Corey, I'm sure you see that. If you got somebody that can negotiate a deal and get no closing cost, that helps your monthly payment, doesn't it?
Yes, it does.
Yeah. So if you could find that, if you can negotiate that in there, because I'm seeing that all the time, almost all my deals that I've been doing this month and last month, is I'm getting sellers to agree to concessions and even some money for rate buy down.
Mm-hmm.
So those are all really, really, really important things to focus on. That's what we're focusing on right now. So when you're listening to general messages that the interest rates too high, prices of homes aren't going down, everything needs to come down. Well, we can wish in one hand and do what we can do in another and see what fills up faster. But the end of the day is, well, let's take the current situation and make a solution for it.
Right.
And I'm finding out that there's a solution for it. We just got to believe in that. Yeah. So let's talk about this Fed chair and why it actually matters. Okay. Because people are reacting emotionally because they don't really fully understand what it actually means. So the Fed chair is a new leadership that changes market sentiment. Investors analyze every comment that gets made on this stuff. Markets react emotionally to tone and the future expectations of what's going to happen. And the Fed's moving slowly and cautiously right now. And one chair really doesn't instantly reverse policy. So really, guys, this isn't like changing a football coach where suddenly everything changes overnight. The Fed is like steering a cruise ship with a spoon that moves very, very slow.
That's such a funny visual.
It is, right?
That's a good one.
And the second announcement happened, people online immediately started screaming, rate cuts are coming.
Mm-mm.
But inflation is still sticky. Insurance is high. Food is high. Energy costs are unstable. So the Fed can't just panic and slash rates immediately. And honestly, the Fed's biggest fear is probably lowering too fast and reigniting inflation all over again.
Yep.
Right. And consumers forget the Fed watches consumer behavior too. So if people start spending aggressively, again, inflation can heat back up. So if inflation spikes again, that could actually delay rate cuts longer. And then buyers get discouraged again because expectations got too high too fast.
I think buyers are desperate for certainty. They just want someone to tell them this is the right time, but nobody can guarantee that. And honestly, buyers that focus too much on timing usually create more stress for themselves.
You know that magic crystal ball from Temu?
It's not going to help us here.
No. If we all had it, we all would have bought houses 10 years ago
100%.
and sat on it.
I use the crystal ball example all the time. It's not a matter of if I knew what rates were going to do, if I knew what the market was going to do.
Yeah.
Probably wouldn't be sitting here. Would be somewhere in the blue seas, living our best life.
Honestly.
Blue
Catching
skis.
some fresh tuna. That's my.
Well, we were actually going to take a quick break from this comment and the content that we're talking about today and jump into our favorite part of the podcast.
Game time.
So again, guys, the internet has officially lost its mind. And you know me, every week I come up with something crazy. This game is called Rate Cut or Scam.
Oh, great.
Are you ready?
Everything's a scam.
So you guys got to tell me if this is a rate cut or scam.
Okay.
Waiting until rates hit 4% before buying.
Scam.
Why? Why do you think that?
Don't wait. We have to. Literally, we have Corey right here telling us, do not wait.
Thank you.
Am I right? It's a scam.
I mean, yeah.
You guarantee 4%.
We can't guarantee where rates are going to go. All we can say is, where we're at right today.
Right.
All right.
Big scam.
Taking mortgage advice from somebody who says, date the rate, marry the house.
Wait. Date the rate, marry the house. We say that all the time. That is.
We do.
That is.
Been refinancing.
What's the other option? Not scam. What was the other one?
Rate cut or scam.
Oh.
Well,
I know.
no.
This is a catch-22.
Listen, if it happens, it happens. Refinance.
Yeah, do it.
It'll buff out.
If you're, I'll be honest with you. If you hear that from somebody like Crypto Kyle or somebody on the internet,
well, yeah,
that's one thing. But if you're actually talking to somebody,
Like
the
us,
whole idea
Rakers home group.
behind that date the rate, marry the house crap is you find the house that you want.
Right.
The house is not going to change. It's going to stay consistent. That's your constant in this equation. The rates can change every 6 months if you're there, and you can actually refinance, right? Every 6 months if you want to, or there's no general rule.
It depends on the loan program, but I mean, there's a refinance takes place when there's a financial need and it makes sense.
Yeah,
right.
Agreed.
The VA specifically wants you to hold for at least 210 days before refinance, but there's some different things. But I think to add to that, if you're dating the rate and you're marrying the house, just make sure that you're working with somebody that's going to have a conversation in detail about what rate you're taking advantage of and breaking it down.
I like that.
Yeah.
That's right. Very good. So when you hear that phrase from us, it's important. When you hear it from somebody else, red flag.
Sure. Yeah. Anybody from Rakers Home Group or Corey,
Yes.
you hear from us? We got it.
There
All
you
right.
go. All right.
Do it.
Buying a house with zero savings left afterwards because, I don't know, just buying a house with zero savings. No, I wouldn't do that.
That's my buzzer. No.
Oh,
Sounds like
gosh.
a terrible buzzer. Sorry.
Here's one. Trusting TikTok economist. You know what? I was going to say that 5 times fast, and Dane was going to tell me you only need to say it once. But trusting a TikTok economist that does a film for that in Lamborghinis that they rented for 45 minutes.
Oh, God.
Get out of here.
That's a scam, right?
That's a total scam. You renting a car for 45 minutes. Crazy.
Although I probably would rent a Lamborghini for 45 minutes.
I was going to say.
To drive it.
Not
drive it. Film.
Not to film. Put it in the driveway.
Look at me.
I might have like Nelly do one of my listing photos with me. And a couple Lamborghinis and horses.
Lambo in the
That'd be
back.
cool, wouldn't it?
Oh, it's handy.
No.
I dare you to try that on your next listing. This listing you're going to get coming up.
Yeah, I'm not doing that. All right. So here, listen to this. Seller says, I know rates are high, so I'm going to add $5,000 to the price.
What? No, don't do that. What a seller. Who's telling him this?
That's emotional
Get out of
terrorism.
here.
Emotional terrorism.
I'm going to use that term.
That's good.
I'm going to use that term.
Emotional
You
terrorism.
should. You Shit.
Anytime I'm in an argument with Matt,
Yeah.
causing
emotional
emotional terrorism right now.
I feel like that's what I experience every Fed meeting.
No, no.
Emotional terrorism.
That's every day.
Like what's coming now?
So funny.
Uh-oh.
All right, we hear this a lot. Refusing to buy now because they're waiting for the market to crash while your rent keeps increasing every year.
Goodbye. Scam. Goodbye.
Just
No.
paying someone else's mortgage.
Mhm.
That's it.
It's my favorite saying.
Ooh, right now, buying the most expensive house available.
I mean, go off if that's
I
what
mean,
you got.
can you afford it? Sure. Good for you.
All right.
YOLO.
Yeah,
YOLO.
That's
I mean-
literally like, yeah, YOLO. Go
Guys, technically, I can eat 37 tacos, but really, should I?
ahead. No.
No. All right.
37 is
Mm.
kind of impressive.
I love tacos.
You buy that luxury house, next thing you know, you're eating ramen in the kitchen.
Pretty much.
Well,
Let's see here. You ready? People are posting the housing market is doomed, while homes in their area are still selling in 8 days.
it's the opposite of doom.
Don't listen.
Let
Yeah.
the numbers talk.
Oh yeah, I'm clicking follow on those people that
Yeah.
are posting. I want to see what they want to talk about more because it's
No,
a
I'd
joke
comment
to
and
me.
be like, what are you talking about?
Not in this market.
It's the fear factor.
8 days.
100%.
The fear factor. Okay, last one. Trusting your cousin.
No.
It's like Uncle Joe or Uncle Bob.
I know.
All right, trusting your cousin who bought one Airbnb in 2021 and now acts like Warren Buffett with a fire pit.
Scam.
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 Your cousin's wrong. Don't listen to your cousin.
All right, that was a crappy game. I'm sorry, guys.
it's not.
Oh, what a mess.
I liked the Lamborghini one. That one was wild.
Yeah. Oh, what was the other one? Emotional terrorism.
And
Yeah.
emotional terrorism. That's a new term.
Adding it to the vocabulary.
I need to go back to these podcasts and just listen to find out some really good one-liners for us and just like laminate it and have it available for you guys
Yes.
on call at all times.
Rakers home group.
I thought you could like put that on a t-shirt and have all the conversations.
Words of wisdom
You're giving me emotional
by the
terrorism.
RHG team.
Add it to our fire
All right.
pack.
Well, the whole reason why you guys are listening right now, oh my gosh, is we want to see what it means for you as a buyer. So all the stuff that we've been talking about. So right now, buyers really need to hear this. Trying to perfectly time the market is dangerous. Remember the crystal ball from Temu? No
Mhm.
way. All right. Buyers still have leverage in many situations. So you can negotiate those acquisition costs that we talked about, closing costs, rate buy downs, repairs, incentives. But think about it this way. If rates drop aggressively right now, that leverage disappears fast. And then what's going to happen is it's going to cost you more to get into the home. That acquisition cost is going to go up.
Yeah.
So will prices of the home. Right now, it's a buyer's market. I feel it's just like a balanced market right now. There's give and take on both sides. Buyers are sacrificing a little bit on the rate. Sellers are sacrificing a little bit on price to make it affordable. So it evens it out. And at the same time, I think buyers are winning more. So that's why we're considering it more of a buyer's market. All right. But I don't know if everybody remembers this or not about how insane 2021 and 2022 got. But buyers were waiving inspections, paying for appraisal gaps. I'm sure you saw a lot of that. I know we were doing offers on houses before we even seen them $40,000 to $50,000 above the listing at asking price.
Yeah, the open house example, right?
So,
I mean, there was 12 cars waiting on the street before you even opened the
You're
door.
30 minutes
Mhm.
early. There's already a line.
And then
I-
in my world, the appraisal gaps. I mean, we had overvaluation left and right.
Wow.
Appraisers were starting to get scared. There was, the conservative approach to the value.
mhm.
People didn't care. They wanted the home.
Yeah, I didn't need to do open houses then. I didn't need to do anything. Just literally put it on the market and push paper and ask somebody, would you like fries with that?
That's right.
Oh, no.
Yum.
So, but yeah, that the appraisal gaps offering ridiculous amount over asking. Honestly, a lot of buyers were miserable during that market because you see them now or even 2 years ago when they tried to resell, they weren't getting the money for that. So yes, rates were lower, but the buying experience was chaotic, absolutely chaotic.
I can't imagine. Like, I wasn't a realtor at that time, but the fact that you're saying people were lining up,
I
at a
used to
house,
get
that's
yelled
nuts.
at by other buying agents.
just not being on time.
If you had 15-minute window, you had to be out there 14 minutes and 59 seconds.
Wow.
Yeah.
I can't imagine that.
Buyers would get discouraged too. They would almost give up.
They
If you
would.
see that line, you're like,
You know,
no.
Yeah, I feel like that's just like
You
super
see something
discouraging.
online,
And
it's already
you're right.
sold. Mm-hmm.
I kind of wish I had that experience. Anyway,
Mm-mm.
No, you really didn't.
well,
It
yeah,
was
but
nightmare.
I think I like chaos a little bit.
Oh, I
That's
love
why.
it. I love chaos, but not like that.
It was nice for production and bank account, but it was,
Correct. But emotionally and
It was
mentally, you're like,
stressful.
what the? I think buyers need to stop obsessing over rate headlines and start focusing on affordability and long-term goals. Because if the payment works for your life and the home fits your needs, that matters more than perfectly timing a percent.
Oh, yeah.
Because nobody knows exactly where the rates are going. So take that. That's
Do you
a
know
win.
where the rates are going, Corey?
I do not.
That we brought a professional
That's-
on. I'm
No
just-
crystal
No,
ball,
that's on
Frank.
reporting, right? I
No
do not know where
crystal
rates are
ball.
going.
Yeah,
No
the point I
crystal
was making on that one is that we do not know. All we know is we're just enjoying this wave, whether it's big or small. We're still going in that direction.
That's right. We joke as a team. We say they're always going down. We just, but,
Yeah.
we have no idea.
No, we don't.
Nobody knows exactly where rates are going, and refinancing exists. I think some buyers forget that rates can potentially be adjusted later,
Mhm.
but you can't go back in time and buy the house you lost because you waited too long. And if rates do drop, you may suddenly be competing with a flood of buyers.
Well, that goes back to the date the rate, marry the house.
That's right.
It does.
What you just said, JC, regarding about the house that you lost because you waited too long. That's what it's intended for. Not every house is exactly the same. There's always a subtle shift in it, even though you buy a spec home or a builder home, and some of them are like identical, just flip flop, like in a mirror. But it's that specific home, that specific location. There's no other place like it. So focus on that. Corey and all of us will figure out how to make it affordable for you.
Correct.
He's got a plethora of programs that he talks to us about all the time to help with that acquisition cost and that affordability class about living there.
Yeah.
So a lot of great things, a lot of great things. But everybody wants to enter the concert after ticket prices drop, but nobody realizes how long the line gets.
Yeah.
It's like a caravan, especially
It
when I
is.
did those in the early 2000s. No, thank you. But real estate is supply and demand. When affordability improves, buyer activity explodes. So right now, everybody that's on the fence that's complaining about it, the fear factor, that happens a lot. Heck, that happens about everything right now. You're talking about property taxes going away for Florida residents. They got into detail about that, and we'll talk about that on our next episode. But right now, he's saying no taxes for $250,000 or less. And eventually, after he's done being a governor, he wants it to go up to what, $500,000?
I think that was what they talked about recently.
But everybody's worried about the infrastructure and stuff like that. Trust me, I'll tell you that that's still going to be there in some aspect. But that whole the fear mongrel and everybody else is going to
Right.
like, oh my God, if Florida's going to go broke.
And
Well,
politicians being politicians, they scare their constituents.
no, we won't.
But it won't happen.
Florida is not going broke.
The
and it ain't
reality
going
of it is, out of the entire population in the state of Florida right now, do you know that it's less than 60%? So almost less than half of people that live in the state are primary residents.
Right.
And already 20% of that, less than half, is VA, veterans. So we talked about the buyers. We talked about what that meant for everybody. So let's talk about what it's going to mean for the sellers real quick. Okay. So sellers definitely need to understand this right now. The market is no longer forgiving at bad pricing. And we've been talking about that, how to list homes right now and what you got to be on and what you got to focus on. So buyers are definitely payment sensitive, and inventory is rising in many markets. And one of the reasons why is because overpriced homes are sitting longer and are still there. And the realtor doesn't want to give up, neither does the seller. Conditions matter more. And the last couple episodes, we talked about that. Marketing matters more than ever. Oh my gosh.
We're seeing a lot of fun marketing trends on real estate, Instagram, socials,
Mm-hmm.
it works.
Broker opens are becoming more important.
Very popular around Northeast Florida. You see 'em
The
happening all
days
the time.
of the blurry iPhone photos that aren't centered,
Outta
toilet
here.
seat up, other things laying on the counter that shouldn't be, the dog sitting in the hallway. Those aren't cute. That isn't real life. I mean,
Right.
we're not doing that. So, throw it on the market and hope that if you get 18 offers, that's gone.
Yeah.
That's
no,
been
it is.
gone for a very long time.
For a while. And
Yeah.
buyers are way more cautious now. Like we talked about this in our last episode. They're just way more cautious. They're analyzing. everything when it comes to insurance costs, HOAs, taxes, monthly payments. We even talked about, if your house is a fixer-upper, right? What that's going to look like. So if your home is overpriced, buyers will move on very quickly. And sellers also need to understand that presentation matters a lot more now. Photos matter, like we talked about, conditions, the marketing. You can't expect top dollar with lazy preparation anymore.
Lazy
Just
preparation.
not happening.
And sellers need to stop comparing today's market to peak COVID insanity. That market was not normal. Today's buyers are more educated, more cautious, financially stretched, and the timeline's really extended.
Mm-hmm. And smart buyers that have the right realtor professional that's sitting right next to them, guiding them.
Nudge.
Pricing strategy is correct. They do that right, preparing the home properly, offering incentives when needed, understanding the buyer psychology. I know that we do that in our buyer consultations. So I get pretty in depth about it.
Mm-hmm.
And it's not even bringing up past experience and stuff like that. That's one thing. I do not go to a buyer consultation or a listing appointment and go, hey, look at me, guys. I've sold 166 homes in the last 6 years.
Right.
I'm the best.
Right.
I talk to them, hey, I'm talking about you, your home, your wants, your needs. What's going to help you in this situation? Because I'm going to tell you, you're going to give a rat's ass about what happened and how I took care of customers in the back. You don't care.
Yeah.
You care about what I'm going to do for you.
Right.
And that's what it's all about for us.
Yeah, I think the hot topic here is the overvaluation side of things.
Yeah.
Jaycee just mentioned it. The market's not what it was last year, let alone 3 years ago, right? And so it's a constant pivot, and it's you have to pivot with the market, and you have to position yourself accordingly, right? Whether you're a seller or a buyer. So I think it's also important, on the sell side, having that relationship between a realtor and a lender, because there's things that you can do to work together to make it more attractive, right? So how many times do we see now where a lender like myself is stepping in to cover a portion of the closing cost, right?
Yeah.
Or saying, hey, if you work with this person, maybe consider a free appraisal.
Mm-hmm.
Right? So there's things that we can do and we can partner on that would be not only beneficial to the listing and the seller, but also to incentivize buyers to get there.
Yeah. No, that's so true. It's like we're your dream team. You got a good realtor and a lender.
Yeah.
Right.
You always got to have.
We work for it.
We talked about this before. Probably the two most important people to have in any real estate transaction is one is a good realtor and a lender. Because you can pick up the phone and call us and ask those questions and have that knowledge. Because I'm going to tell you more than anything, and people don't realize this, and I think they get this misconceived false hope from social media. But the truth is, knowledge is power.
100%.
And the more you know, the more these people, everybody gets educated, the better they're going to be. And I'd rather take real world advice from somebody who lives in it every day rather than listen to Crypto Kyle.
Correct.
In a hooded shirt, sitting in a rented Lamborghini talking about, what the mortgage rates are going to do tomorrow because, that guy's got the inside track on that. Probably not.
Right.
So here's the big picture. This is where I think the housing market's going to go and what it's really dealing with the rest of this year. So it's volatility. The flat out, it's a volatile situation right now. Okay. And in Northeast specifically, people are still moving here, which is really, really good.
Yes.
Okay. So that volatility isn't going to affect us as much. I think there's 5 states right now that are really, really, really hot, and everything is pretty balanced on the other ones.
Florida, Texas, Tennessee,
Arizona.
Yeah. What's
Carolinas?
Oh yeah. More north, I would say. Less, not as much south. I think.
I think it's a growing market in both.
It's a growing market in both.
I better be. They're finally fixing those roads.
Yeah.
South Carolina roads. I'm sorry.
I-26. It's terrible.
We love you, South Carolina, but I'm just saying, fix the road a little bit.
People from California alone for a while.
You did, and you know what? I think we need to talk about them again next episode.
Oh, I'm going to bring them up because I just actually talked to a customer from California, and I was biting my tongue the entire time I was on the phone with him, and I said, just so you know, I actually have a podcast. She's like, yeah, I know. I've listened to it. I'm like, really?
Gotcha.
That's why I called you, Eric. She goes, because you make fun of us all the time. She goes, but you want to know something? I'm like, what? She goes, you're right.
Yeah.
And she goes, and I want out.
Shout out to you, girl.
Let's go.
Good. Shout out.
Why Northeast Florida is still moving here for us. And this is what I love about it, because we're actually seeing a lot of out-of-state people come in like we always do. But we're seeing that shift from southern Florida up to North Florida. Why? It's more affordable.
That too, yeah.
And it's because of jobs, weather, taxes, and lifestyle, just flat out. So even with higher rates, there's still demand. I tell you what, I think the market is becoming more balanced. And honestly, that's healthier.
Yeah.
All right. It's less emotional insanity and more actual strategy.
Right.
Guess what? People got to do the work.
Oh, yeah. And consumers need to stop treating headlines like guarantees. One Fed announcement doesn't magically fix or affordability overnight. All right. We know that. Real estate is still local.
And buyers and sellers both need guidance more than ever, because there's so much misinformation online right now. And honestly, people just want clarity. They need clarity. They deserve clarity.
Mm-hmm.
So talk to professionals.
Amen.
Before we wrap this thing up, Corey, I got to put you on the spot for a minute.
Uh-oh.
I'm going to ask you, what is the craziest thing you've ever seen on a buyer's bank statement?
That's a good one.
Oh, man. Well, there's these initials that start with O and
Oh, no.
with F.
Oh, no.
Oh, you can say it on here. That's fine.
Yeah.
The OnlyFans thing?
Yeah,
Is that
OnlyFans.
purchases or is that actual income generated?
Subscription?
No, I mean, if it was income, we might have been able to use it in today's market. Right?
You know?
No, it was purchases, but it was funny because it was the same guy that was complaining about 0.25% of the rate. So the difference in that payment was like $40, I believe.
Oh my gosh!
I said, maybe we just have some lifestyle changes.
Maybe cancel Netflix or
be less worried about the mortgage payment, right?
And it's so funny because I talk about, one of my good friends that him and I coached travel softball for a while. And of course, I had to kind of step away from it because, well, work is getting busier. But, we talk about how expensive it is. And like we're going to result into fee picks and stuff like that.
Yeah.
Well, that is a lot of money.
Yeah. Why is there a market for fee pictures?
Let's not go down that road, just like we're not going to go down gambling advice.
But
Hey.
still.
But, you brought up the OnlyFans thing. And I brought this up that last year, one of the team members on us, that a buyer worked for OnlyFans.
Yeah.
And it was interesting how to get the loan through that go and how to provide proof of income. It was very interesting, but we got it done.
Bank statement loan.
Yep. That's exactly what it was.
That's crazy.
I know, right?
Because are they technically 1099? Their contract, like
they are,
they're
but
self-employed.
we had to have OnlyFans provide us proof of that.
Yeah.
Interesting.
Mm-hmm.
So
Okay.
if you go normal route, you go self-employed tax returns,
Right.
or if that's not showing the amount of income you need, then it's 12 months bank statements, and you go
Whoa,
off sheet.
that's crazy.
Well, if that is your profession and that is your main source of income, and you always tell yourself or somebody tells you that you can't buy a house,
they need homes too.
Yep, they need homes too. And guess what? We can help you do it.
We can help.
There's ways to do it.
Doesn't matter what your job is.
That's it.
We can help.
Corey just needs your tax returns in.
That's it. That's all he needs.
He'll do it. He's got it.
But here, final takeaway of everything that we've been talking about in this episode. So the truth is, the Fed chair does matter, but it's not an instant reset button for the housing market, okay? People who win in real estate right now aren't the people who worry about that perfectly timed rate. They're the people who make smart decisions, bought within their means, held long term, and stayed focused on strategy instead of panic, which is what everybody's trying to do. And everybody's failing right now. So what I'll tell you right now, if you're buying or selling in Northeast Florida, reach out to the Rakers home group here. Okay. We give it to you real. Trust me. I mean, if we're talking about OnlyFans right now, I mean, the real story. We give you the real story, and we're not fear driven like the internet version is. It's realistic. It's transparent, and we'll guide you through it. So follow us on all our social media stuff. We're everywhere. And better yet, call us. Get to know us. We'll help you answer any questions. It doesn't cost anything to talk to us. We'll help you through. Give Corey a call. Put his information below the podcast so you can get a hold of him if you have any interest rate questions or anything mortgage related and the programs that they offer. He'll be able to help guide you through that. But I hope you guys enjoy this episode and hope it gave you a little bit more clarity and take away some of that fear that's going on right now, because that's what people are focusing on. Let's keep them scared. Let's keep them controlled.
And that's not what we do.
No.
We're going to strategize.
Let's
that's the word.
Power back into the people.
For sure.
That's it.
Nah, I'm not going to get
political.
political
Today.
It was very patriotic.
It's awesome to have you.
Thank you, Corey. That was great.
We missed the Dane, the Coussens. So hopefully we get back. But like he always says, get to know us.
Yep.
Call us, get to know us. we'll help you out in this market, and it is getting better. So other than that, we appreciate you guys listening, and we'll see you next week.
Bye now.